Hello guys, welcome back to ESENtaxa. Andrea Papito here. In this video I'm going to talk about how to avoid to pay the INPS. What is INPS? Is the Social Security mandatory to pay in Italy. And a lot of you guys ask me how to skip this mandatory payment when you run your activity while you're in Italy, while you're an Italian fiscal resident. Before I move forward, please subscribe this channel because it's very important to help us grow, and in this way you will be always updated with new Italian regulation, new law, new fiscal system, new fiscal tricks, and click the like button and the notification bell, please. So, about this way of skipping paying the mandatory INPS, how does it work? What is the cases, and how can we basically find the type of income that doesn't require you to pay this big amount of money? This is because the INPS, the Social Security in Italy, is quite big. We are talking about 26% on your imposable income. So, for example, normally you earn like 100k and you have 26,000 of social contribution to pay to the Italian state. For a lot of you guys, this is a huge amount of money. So, in this channel and here in ESENtaxa, we always found a way to minimize or even skip or avoid to pay this big amount of money. So, and also for those who doesn't believe really in the future pension, that Italy can basically gives you when you're old, when you're retiring. So a lot of people, they don't trust a lot of government. They say, no, for me, it's just a waste amount of, it's a huge amount of money wasted that I won't receive it back anymore. Okay, I can understand your reasons, guys, and that's the reason why we are here to explain exactly how to avoid this big amount of money mandatory to pay. So the first case is when you run a business as occasional work. We already talked about this specific type of income in the previous channels, in the previous videos, where basically the occasional work is when you have an income of only 5,000 euro per year. Okay, it's very small. This is when you start up your business. So actually you start up your business in Italy and you want to see if it goes well. 5,000 euros because maybe you start your business at the end of the year, like September, October. So you start earning something. And in this case, you don't need to open any VAT position. You don't have to pay any taxes up to this amount of money. And of course, there is nothing to pay in terms of Social Security. The second case instead, it's when you receive royalties. So you sell some intellectual properties to someone else, and this guy is exploiting your intellectual properties for commercial purposes. Well, for this specific case, there is nothing to pay in terms of Social Security. Of course, it has a different taxation. The taxation falls into RPF, the normal one, but there is nothing to pay as a Social Security. So you're supposed to provide yourself or looking for a private Social Security system, private Social Security institutions to build your future pension for this. But again, it's not mandatory. There's a third case which is not so common. I think you never heard about it. So basically, it's about be a partner of an Italian company with a specific contract in which you basically share your profit, in case also your losses. So you're not going to be a shareholder of this company, but you're going to be a partner. So it's a partnership contract basically with a specific kind of constraints and rules. And if you follow those constraints and rules, the result of this relationship will be that if the company earns a certain amount of money and makes some profit, part of this profit goes to you, and the taxation is like a dividend. So you will pay 26% flat tax and you don't have to pay any social contribution. So maybe 26% in terms of taxes is quite big, but there is nothing to be paid in terms of Social Security. So you're exempt to do it. And the fourth case is when you perceive dividends. In that case, you are a shareholder of the specific company, a foreign one or an Italian one, but you are perceiving a simple dividend. Also in this case, you're supposed not to pay the Social Security, but in Italy, you have to be careful because if you're a worker, if you're operating this company as a worker, then you're obliged to pay the Social Security also on your dividend. So you have to be careful here. So you're going to be a shareholder of an Italian company as just an investor, so you give some money and you hope that the company grows and then you're waiting for the profit and then for the dividends. In that case, you're exempt to pay any Social Security. And moreover, if you receive the dividend from a foreign company, which is not legally set up in Italy, so it's a foreign entity, you receive the dividend from the foreign entity, for example, from European Union or also other countries, there is nothing to pay in terms of Social Security. So those are the 4 ways to skip the Social Security in Italy. I'm going to give you also an extra information about how to reduce the INPS, so the Social Security, as much as possible. So you're not going to skip it, but you are going to pay a very, very little amount of money. And this is the case of Forfeit Regime. So you open a business using the Forfeit Regime with a specific code activity, such as e-commerce activity, where you have a deduction of 60% of your income. And then, of course, the Social Security will be calculated after having deducted this 60%. So the result will be under the calculation of this 26% of the Social Security. For example, you earn 100,000 euro, you remove 60,000 euro from your income, tax-free, and then only on 40,000 you're going to calculate the Social Security, and then the taxation of the Forfeit Regime, which is very limited, it is only 5% of it. It's very, very small one. Another case in which you can reduce the Social Security at very minimal numbers, it's the Impatriate Regime if you relocate in the south of Italy. So if you follow this channel, you know exactly what is the Impatriate Regime. I will put it in the description below, all these specific regime in this video as well, so you can have a look at it. But keep in mind that the Impatriate Regime gives you a deduction of 90% of your income. So you remove your income by 90%, only 10% of your income will be taxable and will be imposable for the Social Security. So again, if I give an example in numbers, you earn 100,000 euro, only 10,000 euro will be imposable for your Social Security. And if the Social Security is 26%, so 26% of 10,000, it's just 2,600 euro to pay in terms of Social Security, and you have earned something like 100,000 euro per year. You know, it's a lot of money that you're going to save. In this channel, I also made a video in which I explain exactly how the Social Security in Italy works, how the calculation works, how works with the percentage type, which is almost 26%, and when is the case of paying a fixed amount of money on Social Security, regardless if you're making some income with your business or not, and which is the case of mixing fixed plus percentage payment of Social Security. So look at this video as well. It's very, very important because you will have an understanding of how this Social Security works in Italy, which is it seems to be complicated, but once you have watched this video, you will have in your mind a clear vision of how it works. And thanks to this video specifically, you know exactly how to skip it. How is the case in which you can basically don't pay this huge amount of money, huge amount of Social Security to the Italian government. Of course, each case has to be analyzed individually, and for these reasons, if you see that under the video, in the description below this video, you will have the link to our consultancy services in which you can understand, in which we can learn about your business, your type of income, and we can basically help you to understand if you can avoid to pay these INPS, this Social Security for your future pension in Italy. Also, in the description below the video, you will find the email ESENtaxa@gmail.com. Just to have any questions, just drop us an email. And that's it for today's video. So see you next time.